Good morning, ladies and gentlemen. Yes, I'm very pleased to be with you this morning. I will perhaps present some operational issues foreign exchange linked to the proposal of MiFID II and MiFIR, especially on the market structure. Perhaps a few words on the Luxembourg Stock Exchange. The Luxembourg Stock Exchange is rather small in the trading space. I mean, we have limited volume of trading on exchange. We are a medium-sized exchange in terms of employees and turnover among the European Union exchange, and we are large in terms of listing activity, especially in the debt capital market segment. With MiFID, I mean, it's very important for us because it's the legal framework and the way we operate markets, two markets, a regulated market and an MTF. In fact, I mean, legislation would try to anticipate consequences of the adoption of the EU legislation. As an example, in MiFID I, we have created the first European MTF in July 2005, prior the implementation of the MiFID directive, because in the Luxembourg law, implementing the market abuse law, we created the statute of MTF nearly 2 years prior the implementation of the MiFID I. I mean, we are very pleased, I mean, that's not in the slides, but we are very pleased, in fact, to see that the proposal on MiFID II and MiFIR has not touched the framework, the legal framework, the existing Article 40 of MiFID on the listing part, because listing is an important element, and we think that the European Union legislation should be neutral and avoid to shape too much the structure on market functioning. Then the other slides are more concerned on the link to the evolution of the trading space. We would have preferred, I mean, to see an explicit definition of OTC trading in MiFID II. We think it is important because the title of this directive is about market in financial instrument. Then it should cover all kinds of trading activities, and it's still unclear whether or not MiFID touch, I would say, the OTC space. It touched the OTC space indirectly through conduct of business rules, but not directly. There is no real broker-dealer legislation under the EU framework, and we think it's a missing part, and it could have been an improvement. In fact, I mean, we see a different tentative is to avoid to define the OTC trading, but to move part of the OTC space into the OTF category. But we will come back perhaps later on under the discussion. Yeah, we would have preferred to see the existing recital 53 included in the article, even with more clarification and definition on the wording used in this recital. On the existing category of market, I mean, regulated market, MTF, systematic internalizer. I mean, first, I mean, regulated market, it's a quite, de facto, we can see it's a quite consistent definition. Today you have 94 regulated market. They are more or less markets operated by exchange, it's quite consistent. On the MTF category, you can see two big categories of MTF, which are first the MTF operated by exchanges, which are the junior market, second-tier market, third-tier market, and this was more, in fact, the consequences of prospectus and transparency obligation directive. Then it's a way to accommodate this kind of market. But the other category is the, I would say, ECN category, and here you have the ECN, the new players in the trading space, and also exchanges were forced to move part of their activities on regulated market to this MTF category in order to keep in competition with these new ECN players. Systematic internalizer, we can see in practice that there was no real use of this category. You have only 9 systematic internalizer registered in Europe. It's a clear failure of this category. It doesn't never really function. Again, I mean, we think this category could be improved. I mean, the definition could be improved, and the existing trading space could function with these 3 categories. OTF category, we think it's not necessary, and potentially we think it will have adverse consequences. We see it as a movement of deregulation in the trading space, because again, like for the MTF category, large exchange and even smaller exchange will have to move part of their activities on the OTF category in order to keep pace in competition with the other players, and it will remove what is at the core of the functioning of exchanges. It's the concept of neutrality, and here it will be important in order to keep revenues, to move in part of the activity in the OTF category. We think it's perhaps, I mean, it will benefit for some end users, but it will be detrimental also to other stakeholders. I mean, we don't think that there is very much added value, because moving part of the OTC space in the OTF category without asking the same requirement as a regulated market or MTF, it's not an improvement of EU legislation. We are concerned about proportionality, because I mean, that's a common criticism on EU text. However, I mean, it covers all kind of trading venues, all kind of investment firms, but a lot of trading venues and investment firms are small entities. And sometimes we see requirements, a new proposal of requirements, which are adapted to very large companies, very large entities, and will not fit to the existing entities. Then again, I mean, we think it will lead to more concentration. It will benefit to the largest company and the strongest players that can borne the cost of this new requirement. This is not a criticism. I mean, we are very favorable to the country access to EU market proposal. I mean, clearly for us, it was not consistent to have this missing part in MiFID I, and it's important to fill the gap, the existing gap. One operational issue which was not mentioned in the various debate on MiFID II and MiFIR is about suspension and removal of trading. We have strong doubts that it will be operational. I mean, you can't expect that this kind of decision of suspension and removal of trading will be dealt directly between a regulated market and MTF. It is important to have something which is centralized. Most exchanges have no knowledge about where else securities are traded. They can be traded in 10, 20, 30 different places, and we have no knowledge about where these securities are traded. We know what we have listed, but we don't know where they are else traded. Then things has to be done at a centralized level, at a regulatory level, supervisory level. Otherwise, I mean, we think it's not going to be operational. We think also it should cover the OTC space and systematic internalizer space. I mean, there is no logic to suspend the trading on a given share, and then all the other players can continue to trade the securities. We think this is meaningless. Transparency requirement. We think. I mean, it's good to have a new transparency requirement. However, I mean, we think it's not adapted partially for the bond and derivative securities, especially for pre-trade transparency. And we have also one concern linked to the regulatory environment on the price for pre- and pre-trade transparency. We think it's unfair to regulate only the price at the level of exchange-regulated market, which are in fact a very small part in the overall cost for access to data, to market data, and in fact that's not going to help the end users at the end. It won't make a big difference because the exchange revenues on pre and post trade data, it's only 3 or 4% of the whole cost of the access to market data. That's a short presentation of what our views on this issue of MiFID and MiFID II and MiFIR. Thank you very much.